I think he very much understands exactly, what the ramifications will be, and I think they've been very clear that they want to make sure there's the right and balanced relationships with many of the different countries that they're talking about to accomplish the goals of his administration.
That was GM CEO Mary Barra speaking on President Trump's tariff plans during an interview with Yahoo Finance. Now, her commentary following GM's fourth quarter results that beat expectations raised its 2025 profit guidance. We initially actually saw the stock tick higher on this update, but again, you're looking at shares falling just about 9%, the biggest drop that we have seen since March 2020, clearly failing to impress the street amid some of the risks surrounding GM. Let's talk about that and more. We want to bring in John Murphy. He's Bank of America's managing director. John, it's great to have you here. So when you take a look at that 9% drop here this morning, what is behind that move, and how worrisome is it to you when we think about some of these risks, including tariffs?
Great. Well, thanks for having me. And when a stock's down this much, you always get a little bit worried, but try to figure out why it's happening. As you mentioned, sort of in the lead-in here, is the results were pretty good. 2025 guide is better than consensus right now, largely in line with, I think, buy-side expectations, and at the midpoint, just a little bit lower than our more optimistic outlook. So the financials, as they are being presented, look pretty good. But I think, as you mentioned, there's policy uncertainty around tariffs, potentially even more importantly around EV policy, around IRA incentives, the $7,500 consumer incentive and commercial incentives, as well as what might be going on with the CARB ACC2 or the EV mandate in California and the states that follow them. So I think from that standpoint, there's some real uncertainty, and it's very difficult to predict which way those will go. But also say, from a mix standpoint, folks are a little bit concerned there'll be negative mix this year or potentially pricing pressure. And I think the third thing to really think about here is that GM has benefited from a very aggressive buyback through the end of 2024. And the current share authorization or buyback authorization is fairly slim. There's not that much left. So I think that is something that's giving some folks a little bit of agita, because they're going to have really strong free cash flow, $11 to $13 billion this year in free cash. So they should be able to deploy a lot of that to share buybacks. But there hasn't been a specific direct commitment, because I think they're uncertain about what's going to happen in the industry as well.
John, real quick to the policy point that you just made. Is GM a little bit too quick to dismiss some of these risks, do you think?
Well, I certainly don't think Mary and the team are dismissing the risks at all, and sort of the variability of which way this will go. I think ultimately this could potentially break very positively for them, particularly around some of the EV mandates in these CARB states, and tariffs probably will be much smaller than feared at this 25% tariff on Canada and Mexico, but we'll see. So I think the ultimate outcome will probably be reasonably constructive for them, but they are certainly not dismissing these whatsoever.
Not dismissing them, but when they did raise guidance, they said that they're assuming no tariffs or tax policy impact. So it feels to me, given by the stock reaction, that investors think there will be some sort of impact. So how significant do you think that could hit that guidance? And do you think that's the main driver here, why we're seeing such a drawback in the share price?
Well, when you look at Canada and Mexico, the 25% tariff on Canada and Mexico that's being discussed by Trump, ultimately, that probably hits about 20 to 30% of their North American production. So that would render that production not profitable. But the reality is there's options to increase production in the U.S. because they have some excess capacity, and to ship some of those vehicles that are being produced in Canada and Mexico outside of North America to avoid those tariffs. So I think there's ways to deal with that to some degree. But if the EV mandate in California goes away and we see a relaxation of EPA emission standards, the reality is the ICE business, their trucks, where they make all of their money, could potentially be far better off, and you could see higher volumes there. So there's a lot of yin and yang to this, positive and negative, that you really need to take into account. And I think the reaction today is pretty overblown.
Yeah, certainly. I was just going to say, it almost sounds like you're saying that this is still a step in the right direction here for GM.
Ultimately, the results are a step in the right direction. I think the guidance is a step in the right direction. And I think the policy in its various layers could break sort of neutral to potentially positive for them, ultimately, when all is said and done.
John, you also covered Tesla. You recently downgraded the stock from buy to neutral. You said that the valuation has captured much of the long-term potential. Is that the only thing keeping you on the sidelines, or do you see other downside risks?
Well, listen, there's many factors driving Tesla stock from fundamentals to technicals to sort of rotation in the market from the Mag 7 to out of the Mag 7 and higher beta stocks. The reality is we had a pretty decent upgrade in April of last year. made a lot of money for investors. We're happy to take a little bit of money off the table, take a step back here. Or some of the parts analysis indicates that there's a fair value somewhere close to $490, plus or minus is our point estimate there. So as the stock was getting into the low 400s, risk adjusted, after having a run from about 160 when we upgraded it, we thought it was time to go to neutral. Ultimately, I think Tesla is a very interesting story, and the real big swing factor there is going to be full self-driving, where they seem to have a bit of a lead on the advancement to autonomous over everybody in the market. And I think that's really going to be the thing that we need to watch this year to figure out whether we stay neutral or maybe we get back on the buy.
John, I'm curious what you mean of the fact that Tesla was kind of caught up in the selling that we saw yesterday in relation to DeepSeek. What does that tell you?
Well, listen, I think there's a lot of tech investors involved in Tesla. In some ways, there's some technical rotation and stuff that are going on there with the stock. But also, Elon is the third largest consumer, or Tesla, I should say, not Elon himself, but Tesla is the third largest consumer of NVIDIA H100s, I think, with a cluster of 50,000 H100s and growing as of towards the end of last year. So they're the third largest consumer. So, they are buying a lot of hardware to ramp up their AI, which will be necessary for FSD and ultimately autonomous driving to really, really work. So the reality is if somebody could potentially do that cheaper, more efficiently and faster, that could eventually create competitors to Tesla in this road to autonomy. But we'll see. But maybe that was part of what was going on there as well. But it's a high beta sell-off, and clearly Tesla's a high beta stock.
And China has been a difficult area for a lot of these automakers to really conquer, especially when you think about the pricing wars happening over there, not just Tesla, but also GM. With the threat of tariffs looming, how do you view China and the market position within China?
So it depends on the automaker that you're talking about. I think the incumbents, particularly the domestics of GM and Ford, ultimately need to really reassess their strategy there and exit the market, because they are truly American companies. And like most major markets in the world, China is going to favor its domestic manufacturers. So I think their competitive position there is at extreme risk, and they're really not making much money there anyway. I think Tesla and Elon's ability to navigate the political environment, as well as be at the leading edge of tech, whether it be EV or AV, will allow him to operate over there fairly well. But remember, they're just getting sort of the acceptance for FSD to be launched over there. So on autonomous, it might be challenging for him to really break through and be competitive. But we'll see. But he seems to be navigating this far better than the rest of the industry, and is viewed as a quasi-global company, particularly by the Chinese and the U.S. government. So I think he'll be able to navigate better than the other international companies.